everybody, and thank you for joining us today. A little bit departure from the norm. This is the first in a series of educational short videos that we're doing in the institutional crypto fund space. I couldn't start it off without today's guest, good friend and a leader in this industry, both on the traditional side and the crypto side. Phil Graham, he's partner at HARNEYS, actually heads up their funds group over there. And has been dealing with the crypto and digital asset space, both from the fund side, the ICO side, counterparty side for quite some time, has deep knowledge in the BVI as far as all the regulation and various other structures and stuff. So Phil, thank you very much for joining us, and I look forward to definitely what's going to be an interesting episode.
My pleasure. Yeah, thank you for having me.
Absolutely. If you could, just give the people a little bit of your background. I mean, you're well known in the space. A lot of people who deal in hedge funds know your practice, who you are, have met you. And for anybody that hasn't, the information is below in the description space. Any which way you can contact Phil will be posted there. But Phil, for the general public, just give a little sense of your background, how long you've been doing this, how did an Englishman end up in the BVI to begin with, and just some color on the overall background that you've been practicing.
Absolutely. So, I mean, my background is over sort of 15 years of dealing with fund structures. I sort of was originally back in the UK. I began to look at funds, was really interested by the space, but I found myself going to work in the dark, leaving work in the dark. If I got out for lunch, it was dark. So I decided that maybe there was more to life than this, but I had the unfortunate problem that I really liked my job. I was fascinated by structures. I was fascinated by this space, but I thought maybe there is a world in which I can get some sunshine, at least on a weekend. And so I convinced my other half to join me in the Caribbean for what we thought would be a 2-year adventure. And we ended up being there. We're still there now, and it's 12 years later. So it's been a hell of a ride. I got there back before sort of 2008, and when I arrived, everyone in the world was setting up hedge funds, and you remember it very well yourself with your sort of deep background. It was cookie cutter. You would roll them out, and you'd see people launch from all sorts of places, doing all sorts of things. And then suddenly we hit 2008 and the world exploded. And there was me, this relatively sort of junior associate, trying to get my head around this world exploding and this industry exploding. And it was scary to some degree, but a fascinating way to learn so much about our industry. And there were so many parts of that no one had really talked about before, and you remember it really well. We were talking suddenly between all of the service providers so often about, hang on a sec, this is happening, we never conceived this could happen, and this is happening, we never conceived this could happen. How do we calculate NAV? What do we do here? And it was a brilliant way to learn. So that has kept my interest, all the way through that period, that distress fund period through 2008 to 2011. And we've sort of grown ever since. So I absolutely love this industry. I learned so much then, and obviously I've moved now to be the global head of funds here at HARNEYS, and it's always been a pleasure to work alongside people like you, Alex.
Well, congratulations on your 12-year anniversary.
Thank you.
And your promotion to head of the funds group there. I'm a little more gray hair, a few more wrinkles on all of us, but one of the things, pertaining to crypto hedge funds or even esoteric funds in the digital asset space over the last couple of years, is that BVI, it's almost been an acceleration with the BVI. I feel like BVI has always had a war with its counterpart, Cayman. But I feel that in crypto, all of a sudden, there was a sudden rush or explosion in the BVI. Tell me what that was like in the beginning. Like, when did you start seeing the beginning of the tidal wave coming ashore, and where has that led to now?
Absolutely. So, I mean, it's a really interesting question for those of us like you that have been in this industry for a long time. You've seen the evolution of jurisdictions. You're absolutely right. We see Cayman as clearly the sort of the market leader in the traditional hedge space, and it's done exceptionally well. And the BVI has always sort of put itself as the jack of all trades. It's absolutely intentionally being the jurisdiction that can do everything. There are over 400,000 active BVI companies out there in the world doing a whole raft of things. A lot of people in the world traditionally use them as just holdcos, maybe for their own private investments, their private assets, but you also see them as joint venture vehicles and listcos, and obviously also in the fund space. So where Cayman started to go down the specialization route and really sort of pigeonhole itself as the funds leader, the BVI, with a fantastic funds sort of industry, still wanted to retain that flexibility, and that's where the BVI stayed for a very long time. As you know, in this industry, what happens is sort of this stone starts to gather, and so much about how to launch and what to do is about what someone else did. So you will turn around and you'll ask, well, what did you do? And the more that Cayman became the answer to that question when asked, I want an offshore fund, where should it be? The more it perpetuated itself, if that makes sense. And so Cayman sort of went out of control in terms of being the standard answer to this question. But actually the BVI has always had this fantastically deep sort of hedge fund industry in itself, and it's always had that sort of second place feel, that challenger brand feel that a lot of people have looked to. So we've always, at HARNEYS, we were born and raised in the BVI, but we have a fantastic Cayman practice as well. So I am relatively agnostic on this point. But as you say, what was fascinating is when the crypto guys started coming along, and for us, this was back in 2016, when we all had to try and get our heads around what this was. It was really interesting because it was different types of people coming to market. And I know you'll have found this from your background as well, Alex. And it was suddenly very different conversations. They were incredibly bright people, but they didn't have that inherent institutional funds background that all of us are used to. There were certain conversations you would have with people and you knew they knew certain parts about our industry. Some of these were starting from grassroots. You know, they knew everything about the crypto world, but they knew nothing about what even structure. I remember the conversations of what is a company? You know, what is a partnership? Why do I have directors? You know, and there are certain things we all assumed as norms that suddenly were no longer that. But what that led to from the BVI's perspective is that they came with a complete blank piece of paper. So when they said, I understand that I need an offshore vehicle, I understand why that is the case, where should I use? And we would patiently explain the BVI versus Cayman conversation. Actually, it was less of a given because they weren't turning around to all of their buddies who had launched Cayman vehicles before. They were saying, well, hang on a sec, weighing up all that you've told me, the BVI sounds like a pretty good option. And so we saw, I would say, across our practices, we probably saw a pretty much 50-50% split between BVI and Cayman, which obviously isn't the classic split when you're looking in the hedge fund space.
I'm sure that led to a lot of office bets and pools, maybe.
How dare you? Yeah, of course it did, and it was fascinating to see it play out because our main guy that was sort of pioneering it to begin with on the West Coast, Lewis Chong, who I know you know very well as well. You know, he is absolutely agnostic on this topic. He is BVI or Cayman. He will happily talk you through both of them. And he was finding almost he was betting with himself about which way they would go. And it was, you know, it was a really interesting time. And so then when you ask, when did it get crazy? I mean, I will never forget 2017. I'm sure you will never forget 2017. The ICO thing that we all went through was unbelievable. We were being asked to launch ICOs, I would guess maybe 20 a week, something like that.
Oh, wow.
And we probably turned down 90% of the ones that we were offered to do. We actually ended up in 2017 doing the world's largest one at the time. It's now been eclipsed. But that was incredible. That ICO thing was so hard to get my head around. I remember one of your fantastic conferences being there, and people were turning around, traditional hedge fund managers who were turning around and saying, how are these guys launching this? How are they finding this capital? How are they getting off the ground? You know, there were stories of people raising 20 million in 20 seconds, you know, so something outrageous. And they were kind of, I have a 10-year track record. I have this amazing reputation in the market, and I can't get capital. How are they doing it? And you know, what was your, you ran those conferences. I mean, what was your answer to that question?
Well, I remember we were, I think it first really dawned on me when you were out in San Francisco,
Right.
back in 2017. We're at the conference, and all of a sudden, I mean, there's just people from crypto in the conference with the
Right.
traditional hedge fund managers, and I couldn't wrap my head around it. And little did I know that wave was just about to slam, and we were just out of our element. We were caught by surprise.
Absolutely. Yeah. But do you
Staggering.
remember? Do you remember? I remember you being on one of the panels, and I remember it was a brilliant panel because there were sort of 5 of you on there, and you were sort of moderating, and you had, I think, 3. So it was you, 3 others, more traditional fund managers who had had perfectly good years, and they were pretty proud of it and wanted to talk about it. And then one guy at the end in the crypto space, and so you beautifully went down the line through all of the traditional guys, and they were very proud of their performances and some great numbers in the traditional space. And then you asked the guy at the end how he had done. And the number he announced was, you could hear a pin drop in the room. It was, you've done what?
Yeah.
And that was a game changer. That conference was a game changer for me because suddenly you, as you say, you had that blend, but it wasn't a natural blend to begin with. No one could properly understand how this was going to play out and how they
No,
were going
I
to
did.
interact. But it was that was the time when I suddenly thought there is something here. I'm not quite sure what it is, but there's something here that's really interesting.
I remember that panel, and real quickly, I remember the other guys on it, and I think one was like a municipal bond
Right.
portfolio, very sleepy, very consistent over the years,
Yeah.
very proud of himself, on the 20-year wall that was built solid. Yeah, that was
Correct.
when all of a sudden those little missives that you would read here and there in the news about crypto, all of a sudden you were like, whoa, what are these people doing at the conference?
Yeah.
This is real, or trying to be real. Um,
Absolutely. It's funny. Lewis and I came back from that very conference, and we had all of our other, I should say, all of our other offshore competitors at that time who were also refused to get into this space. They
yeah,
did not see that this was a credible space. This was not something they wanted to touch. There were also, as you remember at the time, there were all sorts of anti-money laundering issues around it, and just generally, this is something we just don't want to be near. And Lewis and I came back from that conference and said, we either do this because there seems to be something here, or we don't. We follow the same path. And we decided way back when there were enough credible people in the industry that had some belief in this, yourself obviously included, but there were enough people that believed in it that even if we didn't properly understand it, we should do, and we were interested enough to do it. And so we jumped in, and we found enough of our partners in our sort of team, global team, that were interested in it. And we said, okay, we'll pitch our tent, and we'll say, you know what, we will do this, and we'll take it on, and we'll try and understand it. And I think back from our traditional space, when we eventually got to the bottom of it, we just, to begin with, saw it as just another esoteric asset. We'd all launched fine wine funds. I remember doing a cruise ship fund. You did antique car funds. You did portraits, galleries. And we just saw it when we got our heads around and said, this is just another asset. It's an asset none of us fully understand, but that's what it is. They're buying an asset. They hope it appreciates, and they hope they realize value for people. And, once that clicked, it was relatively easy to then put a structure around, if that makes sense. We managed to find a way to sort of mash the two together, I guess.
yeah, in honesty, you actually were more crypto than earlier than I was. I mean, you went through 2017 just blasting into these projects, and next thing you know, I just didn't even recognize you anymore. And I said, wow, this crypto stuff is cool. Okay, so this is about the premise of launching a crypto hedge fund in the BVI and everything that the sunny shores there have to offer.
Yeah.
What can you let's start with the regulation regime. Let's start with how the BVI, both the FSA and the island itself, how they look at crypto. We know that they embrace hedge funds.
Yep.
How have they embraced when you put the two together?
I mean, going back to the storm, going back to 2008, 2011, there was that, if you'll remember it very well, there was that message generally worldwide that hedge funds were bad. Alongside banks, hedge funds were also bad. No one could properly work out why hedge funds were bad, but they were bad. And you'll remember like the AFMD coming in Europe because of this. Let's make everyone's life just a bit harder because hedge funds are bad. And what was great from our experience with the regulator in the BVI was that they were willing to listen. So they didn't have that knee-jerk reaction that a lot of regulators did, and I won't mention any regulators, but some dear to your heart, that sort of, there is bad news around this. Let's bring in something too heavy-handed. Let's, sledgehammer to crack a nut type scenario and slam it down and then worry about it and maybe bring it back up. But they did the opposite. They said, okay, well, let's listen to what's going on. Let's talk to the private sector. Let's try and understand what they're seeing. And they were also very open to investors. So if investors had complaints, you could write to the FSC, you could get an understanding for what it was, and they would then talk to us. And it was a really good dialogue. And it's something I pride them on, more than anything else, is they will listen and they will sit down and they will have a conversation. And, you yourself, you've been to the BVI, you've sailed our beautiful waters, but you've also sat there and listened to the industry, and you sat there with the Financial Services Commission. You've got that understanding of what they're like, and I love that. So when we started looking at what these structures need, and again, you go back to the traditional space, the barrier for entry problem that we all have seen, when we all started in this, you could launch with 5 million comfortably. It wasn't a problem, and you'd be fine. And then every year you'd go to a conference and someone would say, you now must have 20 million, you now must have 100 million. And I can remember going to a conference where someone was talking about emerging funds and emerging managers, and they classed that as $1 billion. And I was like, this has gone crazy. It made no sense. And I came back to I'm chair of the BVI Funds Association. I came back to the group and I said, we've got to find a way to allow startup emerging managers to get going again. And this was before the crypto wave. This was back in 2015, because they're not getting going. And I went to one conference and I had someone come up to me and said, I wanted to do an offshore fund. I have an overseas investor who was willing to put a ticket in, a $5 million ticket. But actually, I couldn't be bothered to do an offshore fund because it seemed so complicated and expensive and hard to do. And so I turned it down. And I was sort of, this is craziness that people are turning away that size check because they don't want to get into what they saw as huge complexities and costs of launching an offshore vehicle. So I came back and I pitched it to the commission and to the private sector. Let's launch some vehicles that actually keep your costs as low as possible, make your regulations as light as possible, still meeting all the international requirements, but as light as possible. And so back in 2015, we launched a fund called the Incubator Fund and a fund called the Approved Fund. And both of those are relatively light touch on regulation. Both of those are relatively light touch on cost. And it just allows someone to get going. And that was the most important part to me, was not to lose where this industry came from, not to lose the traditional part of it, which was people going from just trading in their bedroom all the way through to, some of the fantastic success stories you will see. And beautifully, I'd love to say I saw crypto coming. I clearly didn't, or I'd be a lot richer than I am. But beautifully aligned nicely with the crypto world, because as soon as that started, and you had people saying, I've got this brilliant thing, this is going to make
couldn't have been more perfect timing with the size of crypto funds.
Exactly. And it was suddenly, but I've only got 1 million. I've only got 2 million. I've only got, can I really do it? I hear I can't. And I was like, you know what? In the BVI, you can. And we can find a way to make sure that this works for you, to make sure that you've got that. And so, I'd say that is the biggest strength of the BVI, is it meets all the international requirements. It's been whitelisted by the EU. It's gone through all of that process. So we've got that blessing, but it's managed to keep that relatively low cost, relatively sort of flexible regulatory framework, which I think is just so important in the crypto space, because too many times I've seen, I remember Singapore doing so well for a long time and then over-regulating. Bermuda over-regulated, a number just jumped far too quickly into not understanding this and trying to regulate it before understanding. And the BVI has done the opposite. It said, well, let this play out and we'll get a better understanding for it. We'll listen to people, and then we'll gradually introduce things sort of as they play along. And so it's very open for business on the crypto front. Always has been, always will be. Is certainly what they tell me. So it's a great place to sort of get started, really.
I mean, well, let's go into the difference between the two, the Incubator Fund, the Proof Fund. Like, one, you're widely known as the inventor of the Incubator Fund. I hear you get stopped on the streets of Roadtown quite often when recognized.
I should stop wearing the t-shirt, probably. Yeah.
I think a lot of managers thank you for that. What are the core differences when a fund manager comes to you and says, "Hey, I want to learn more," and all of a sudden you pull out of your pocket, "Whoa, we have this Incubator Fund."
Yeah.
Tell us the fork in the road and how one benefits the other, whatnot.
If I may, I will. It's a bit like a magician revealing his tricks, but I will reveal. This is my first ever reveal of kind of the behind the scenes.
Just for these people watching.
These people right now. It's not being recorded, right? Just for these people. The honest answer is, one of the tricks around the Incubator Fund was the fact that so many people colloquially want an incubator fund. When you talk to people wanting to get started, they sort of say, well, what I want to do is I want to put some of my own capital, maybe some friends and family money, but generally my own capital, and test my track record. I've got this algo, or I've got this idea, and I want to test it in a light touch environment, but begin to get that track record so that when I go out to high net worth, when I go out to other third parties, family offices, even institutional, I can begin my track record straight away, but without having all the cost of putting something together.
But be in a legit structured environment.
Exactly. Yeah. Exactly. And when you ask people sort of what they're called, they would say, well, it's kind of an incubator fund. I want an incubator fund. And so I listened to this time and time again, and I can remember one weekend just sort of Googling incubator fund, and not a single jurisdiction on the planet has something called an incubator fund. And I was kind of, hang on, everyone in this industry calls these things an incubator fund, but no one has one. So I literally started with a bit of paper, which I wrote at the top, Incubator Fund, and then we came up with everything else. But it was kind of like, this is pretty interesting. But again, the whole idea was to give someone something to get started with. Now, the Incubator Fund strips away everything we don't feel is needed. If you really are only putting your own capital, maybe a little bit of friends and family money, there's only so many protections you need. I mean, you're basically protecting yourself from yourself, which is all very nice. And maybe if you're in the EU,
sometimes needed.
Yeah, indeed. But it just doesn't allow people to get going. And, every single person out there that's launched a fund or tried to launch a fund goes into that horrible chicken and egg scenario where you'll sit down, you and I have seen them a million times, that sort of speed dating thing where you sit down there with cap intro people and they'll say, yeah, I love your idea, go away, get a track record, get some money behind you, then I'll come back. And you're like, well, I need your money to help me get a track record to get going. And it's impossible. It's cap intro is so hard. And again, this just allows you to get that legitimate structure there. So the Incubator Fund strips it all away. The Approved Fund is just that one step on. And what the Approved Fund is it adds an administrator. And we felt that was really important, because if you were going to add anything, adding a fund administrator to your structure just adds so much for me. Because you have those primary, admins do so much, and you can talk far better than me about this, but the two primary roles of dealing with the sort of the onboarding of people, going through the KYC, the AML, making sure that you've gone through that process for the fund, and then B, doing the valuations and doing the reporting and everything else. Those are so important. When you start to bring on any kind of third-party investor that isn't your mum, that it's so important you have someone filling that role. And so we felt the Approved Fund was just that nice step forward to say, you know what, go out there and find people that can do it. And we were so lucky to work with, you at North Street, and then you at Quantrek as well. It's, because you saw what we were trying to do there, and you put together packages that worked for the Approved Fund, that meant that it all kind of held together.
Yeah, we came out with Incubator Pricing after, seeing what you guys did.
Yeah, it worked, and it made sense, you know, and it's for all of us, you know, I use the pathetic metaphor that a million people use, so it's not remotely mine, but you know, the acorn and oak tree, we all want to let people plant their acorns, knowing that some of them will hopefully become oak trees, some of them will sit in the ground and still be acorns. Wherever that metaphor goes, but fundamentally, we want to let people plant their acorns, and you've got to therefore give them a chance. And there was so much cost we were imposing on people at the outset, and a lot of admins. You know, there are some fantastic admins out there, but there are also some that just won't come down to a certain level to make it possible for people to start trading with 2 million, 3 million, 5 million. It drives them out of the market. And so it's so important that people, again, recognize the value of that. But, you know, you will remember when crypto people started coming to the table, they were not launching with 100 million, 200 million, 500 million. It was a different world. I mean, I don't know what the smallest was you took on, but it was probably tiny, I'd imagine.
Yeah, I mean, maybe 500,000, 600,000 is the smallest ever. I mean, we got lucky. I mean, you know, when we first went commercial, the first fund was like 400 million, and that was just because of the height of the market. It quickly went to like 4 million now. Just needed a little time.
But that's got. I mean, that's a hell of a one straight off the bat. And but I can remember it's a bit like dog years. You know, we used to talk about the traditional space and then a crypto fund, and so a 20 million crypto fund, you know, we saw as the equivalent of a 200 million. You know,
oh sure, and still is.
Yeah, still is. But then it's so important to allow those crypto funds. You know, a 20 million crypto fund is a great size crypto fund, but you can't then kill it with cost. If it's got to have any chance of getting where it needs to be, you can't kill it with cost, and that's what we were trying to do.
Yeah, I mean, the amount of basis points it would take in the beginning to run those funds was just too much of a gigantic hurdle. And I think what you guys did, what you did, particularly as inventor of the Incubator Fund, I'm going to Google that afterwards and see how many results show up now, you know, was a tremendous leap forward in bringing and driving a lot of business and you know, accommodating a lot of managers during that. You know, one of the things that you previously said was, you know, different things with regulation. They throw one here, one there, and try to complicate. Sometimes you almost feel that different regulators do that almost on purpose, right? They can't stop the bus, so they do as much stuff they can to slow the bus up or make it annoying enough for people to get off, right? And, you know, one of the things that came about, you know, in recent time with BVI is economic substance.
Yeah.
And I mean, a big enough issue that I know that your firm, along with others, but your firm, you know, barraged just opinions and education upon it, because it seemed to be that important. Give us a little background into why the FSC or the government there decided to impose that, and what effect that has had.
You've opened truly a can of worms that I will try and shut as quickly as I can. But
and I'll move on the minute I hear the lid fall.
And that's absolutely fair. I mean, economic substance was the hottest topic of last year. Where did it come from? It came from the EU, our friends in the EU. So remember those fun conversations we had about AFMD back in 2010? We had very similar fun conversations back in 2019. What they effectively announced is that they wanted to make sure that certain unfair tax practices were not going on. And if they were going on, if you wanted to use an offshore vehicle of any form to do certain unfair tax practices as they saw it, you had to say that you had substance within the relevant jurisdiction in which you were having.
Did this have to do more with yachts than it did with crypto funds or hedge funds?
I'm not going to lie to you. The amount of people that said, if you're telling me I have to come to the BVI once a year, that's absolutely fine. And so we have sold a lot of rum cocktails on the back of our substance analysis. But so it became a fascinating thing, because if you think conceptually about it. As I say, 400,000 BVI companies out there. They all need to analyze, every single one needs to analyze whether this is relevant to them. If so, putting something in place. And we were given a ludicrously short period of time to do it. The EU imposed this on all of us. So it's not just BVI, it was Cayman, it was Bermuda, it was Bahamas, it was all of the, Jersey, Guernsey, Isle of Man, all of the ones you'd expect, imposed that upon everyone, and then said you need to comply within this time period, notwithstanding the fact that you have a ludicrously sized registry. And then we're going to start judging you on it. And if you don't comply with it, and this was the big thing, when you say, why did the FSC do it? Because they didn't have to. Why did they do it? If you don't do it, we're going to put you on a blacklist. Now, what's the repercussion of that blacklist? A lot of us thought about it because, weigh up the pros and cons, this ludicrous process that we're going to go through. Is it worth it? The conclusion was, as you know really well from a lot of your different sides, getting a bank account, frankly, is hard enough for any vehicle right now, let alone an offshore vehicle. But if the global banking system knew that a vehicle within a blacklisted jurisdiction wanted a bank account, it would just shut it down. And we felt that any of our vehicles suddenly which couldn't obtain a bank account would be a disaster. So the BVI jumped to attention. It jumped into action. We certainly helped negotiate some of that with the EU, and then bring to market some of the analysis on that and some of the solutions for that. And some of them have been great. We've got a lot of people who are now spending a lot more time in the BVI and are perfectly happy doing it. And we're finding ways to help other people around it. So it's been a huge thing, but actually, thankfully, it hasn't really heavily impacted on the numbers, and it's all going relatively smoothly so far.
All right. Well, I mean, 400,000 companies. It must have taken a little bit of time to go through, I'm sure. Let's talk about anti-money laundering. That has always been either a sore spot or a misnomer when it comes to offshore domiciles. Yeah. What is the viewpoint of the FSC when it comes to investment fund, AML, KYC requirements? How stringent, how lenient? What does that process look like?
Absolutely. So I think a lot of people are often surprised that there is this, I'm not actually allowed to use this phrase, but I'm going to again use it just for you. But there is this viewpoint on tax havens, as they were once called, clearly not correct, but once called. We now have to call them international financial centers, just to be clear. So there is this viewpoint on international financial centers that they don't do AML. It is the home of money laundering. It is where you go and stash all your cash. No one can ever find you. Well done. And there are enough films out there. I don't need to go into them, but there are enough films out there. Thank you, Tom Cruise, by the way, that are filmed and actually make a real example of that. I think people are then very surprised when they come to use an offshore vehicle and actually find opening up an offshore vehicle, you go through the most stringent, ludicrous AML process, to get there, because it's so important to the mainstream international financial centers that they do maintain proper international standards. And so all of our AML laws are drafted on the basis of the international standard, the FATF requirements around this. It's the same as Cayman, it's the same as Bermuda, Bahamas. And it meets all of the requirements that the EU want. What the BVI does, which I think better than almost anywhere else, though, is that it accepts that other countries too have decent AML laws. And so the general position is for fund vehicles that if you have a fund vehicle, it will need to conduct AML on its investors. That's a given. But that if the administrator is based somewhere else in a recognized jurisdiction, as they described it, somewhere else that also upholds proper AML laws, that administrator doesn't have to look back to the BVI laws. That administrator can run the laws of its own jurisdiction. So for example, for you, it is absolutely fine for a US-based administrator to conform with US-based AML laws, and that will be enough for the BVI regulator to be happy. So what I like about that is it gives that flexibility. We so often have people come from all over the world that say, I want a BVI fund, but I want to use this person here and this person here and this person here. That's not a problem. That there really isn't much that sort of ties you into the BVI, as long as you're working with very credible people who are following the right laws.
Interesting. Well, I think I just realized how you ended up being an attorney in the Caribbean. Definitely sounds like it came from you watching a 1995 movie uh, with Mr. Cruz as he sat on the beaches of Cayman. It was either that or Cocktail. I don't know.
One of the two.
Now, there are fundamentally two different ways of doing things on certain surroundings of the fund between Cayman and the BVI. There's AML, MLRO officers,
Yeah,
there's directors, inside or outside,
yeah.
various different licensures, and there's even audit requirement differences.
Yeah.
Can you run? Let's start with outsourced services like MLRO, AML, and directorships. What is the core differences between BVI and Cayman when it comes to those?
So this is again where BVI has tried to maintain that A, regulatory flexibility, but B, lack of cost, because you'll find a lot of people. I always, when I'm talking to people about the BVI or Cayman decision, you could, for example, get a fee quote. You could get a fee quote from a law firm in either jurisdiction, and they might look quite similar on the face of it.
But the menu items add up.
The menu items add up. Exactly right. And this is the thing. So I sort of say, yeah, but your legal fees might be similar-ish, but what are the formation? What are the fixed fees? And they will all be higher in Cayman than they are in the BVI. What are the annual fees? Okay, again, that's a bit higher in Cayman and the BVI. And let's hope your vehicle is around for a while, so they do extrapolate through. And then what about the other things? So you've touched on them. For example, Cayman requires that you have an MLRO, which is a money laundering reporting officer. They have to be independent. It also requires that you have a deputy money laundering reporting officer. It also requires that you have a compliance officer who also seemingly interacts with the other two. Again, they all have to be independent. Again, you will have to pay for someone to provide that service to you. The BVI conforms with the international requirement, which is you only need an MLRO, you only need a money laundering reporting officer, and it doesn't have to be independent. So it's often taken on by one of the directors or whoever else it might be, which makes a lot of sense. Especially where if you're launching with 5 people of which you know all 5, and so once you go through that initial process, you're not onboarding people. There really isn't anything to do. You're paying for these people to perform this function that just isn't involved, and so that's a big difference. The big difference on the directorship side is that if you want to be a director of a Cayman fund, you can be based outside Cayman, but you have to apply to be on their register of directors effectively to get vetted, and you pay for a fee to uphold that. BVI is similar in the sense that you don't need to be in the BVI to be a director of a BVI fund, but there's no register requirement. So there's no cost for doing that. And the final big one that we find around audit is that Cayman has a local audit requirement. So notwithstanding the fact that you're using one of the big 4 in New York to do your auditing, you're still going to have to pay also for someone in Cayman to also do your audit, to vet.
That's a big difference, though. I mean, so just to recap.
Yeah.
AML, compliance, MLRO, you have to pay for outside services in Cayman.
Yeah.
BVI, you don't.
No.
Directorship. For Cayman Fund, you have to pay for outside directors. For BVI, you don't.
Right.
For audit, you need to have the fund audited annually as a requirement in Cayman.
Yep.
As well as there's a local audit fee.
Yep.
In BVI, you do not.
So in the BVI, there's no local audit requirement. And for the Incubator Fund and the Approved Fund that we were discussing earlier, those particular ones, they also don't have to have an audit at all. So you do have to provide financial statements, but they don't have to be audited. So you can use someone,
an administrator, and have consolidated financials.
You've got the flexibility basically to pick a sensible person that can do this role for you. Frankly, you can go out there and start haggling. I always tell what's the best thing to do for, if you're a startup manager, go out and haggle. So, you know, go and speak to Alex and tell him you're speaking to 2 other people, and see what he can drive him down to. And the same with legal. You know, tell me you're speaking to 3 other people, and I'll see what I can do. But you know, that's the point. You have the flexibility to go anywhere in the world to go and speak to people and say, you know what, that's how I want to start. I want to work with that person there, and I want to work with that person there, and I know my costs. I've kept those relatively manageable. I can get going with that. And I think that's so important for people to have a proper feel for what their cost is, because every dollar counts. Every dollar counts when you're getting going. You know, any hidden expenditure that suddenly pops out the woodwork, it's hidden expenditure that you can't trade with, and you have to take out, and everything else. So it's just so important. And I think Cayman is absolutely on the money for when you get to a more institutional grade size. You know, it couldn't be more right to have all of these bells and whistles, all of these protections, all of this infrastructure. It's absolutely where you need to be. And especially, as you know very well, once you're onboarding institutional investors, they're going to demand that. You're not going to be able to bring them on without all those bells and whistles. But there is a huge gap that you need to have a place to get started. You need to have a place that's sensible, conforms to all international standards, but still allows you to keep that cost down. And that's where genuinely, I believe, the BVI is in a much better place.
And you still have money left over for a boat?
Maybe for a boat. Certainly a rum cocktail, I can guarantee you.
I mean, you know, one of the things is, first of all, I've sat in the FSC's office with the regulators with you. Not as scary as it looks like on TV. Very open dialogue. I mean, you have a tremendous relationship with them. I mean, that's I think speaks to how close knit the territory is as far as, you know, wanting things to succeed. With their thought process, is there anything that they further want to do? Are they satisfied for now with the way things are? Are they looking to change up again drastically anytime soon?
It certainly not drastically, definitely not drastically. They've been very clear on that front. They are evolving their thought process, though, around just sort of crypto and digital assets in general. And one thing we did see, and we have seen a lot of increase, is around digital exchanges actually being housed in the BVI. And I won't name them, but there are a number of them that very well known digital exchanges that would say that they're headquartered in the BVI. Now, as it stands right now, with all the disclaimer that I sort of gave at the outset of this, you know, generally, depending on what they're doing, they may well be unregulated at the moment. So they may well be there relatively low cost to also house a digital exchange there. As I say, there are some bells and whistles around that, but generally that's the case. Now, this is one area where they think, you know what, there should be a little bit more. There should be some framework around that for digital exchanges in particular. They also want to look more carefully at ICOs. You know, there have been enough horror stories around ICOs that they want to be careful around that. That being said, I'm sure you would say we're not really seeing many these days. So, you know, Frank, it's that thing's kind of gone.
We missed our chance, you and I. We could have launched some token.
Yeah, exactly. But again, they're having a look at that. So, but what I really enjoy about my dialogue with them is that when they want to look at something, they will push it out to the private sector first. They'll push it out to a committee. They'll say, look, this is what we're thinking. This is what we're looking at. They're always looking at other jurisdictions. So obviously there are some comparison jurisdictions, Cayman, Bermuda, but they'll always look at others as well. So they'll look at the US, they'll look at the UK, they'll look at what's going on in Asia, and they'll say, look, we've pieced this together. This is kind of where we think the world is going. What do you think? And there's always an open dialogue, and I think that's really important. So I would expect over the next probably 2 to 3 years, we will begin to see maybe some regulations around this space. I don't think it'll do anything in relation to the hedge fund space. I don't think it'll have anything to do with sort of crypto asset focused funds, but maybe a little bit more about the sort of around the fringe aspects of it.
No, this has been really great, really informative. And what I want to do is I just want to kind of wrap it up with bullet pointing the process just in the summary form. I mean, it's not all that difficult, is it, Phil? You know, a manager wants to, you know, launch, whether it's a standalone or you know, add to a master feeder structure.
Yep.
they really just, they need to contact somebody such as yourself, explain how the fund is going to work, what's involved, you know, outside of really formation and, you know, kind of some internal rule books and processes.
Yep.
We're talking about, you know, not having to hire external AML, MLRO, not having to hire external directorships, not having to get any special outsized licensures, you know, that other than what is needed to register as a fund of BVI, no fund audit requirements. You know, another thing we didn't touch on, I mean, there's reporting requirements in Cayman. What does that look like in the BVI? Is there electronic portal reporting?
There's every year you have to put in, as I said, if it's an incubator or a proof fund, it doesn't have to be audited, but you have to put in financial statements, and you can submit that digitally, electronically through their portal. So yes, absolutely, that's there. No, you're on the money. I have to. The lawyer in me inherently winces when you say it's very easy, because
am I making this? I'm making this sound wrong by saying it's.
No, it's you just know how the fee conversation goes after this, but
I don't want to blow your cover on it. It's not that easy.
Thank you. But the one thing I would say in the crypto space, no doubt, and I'm sure you would verify this, because you're in the same boat, is that it's so important to work with people who are in this space, and by that I mean the crypto space, because there are so many little nuances. You can find someone that has 20 years of hedge fund experience, that's great, but there's so many little parts to crypto that just needs a little bit of understanding, whether that's around custody, whether that's around complex AML questions. You always get the question about people want to put crypto in rather than fiat. You know, how does that work? Whether it's just questions around, you know, just the high frequency trading guys, you know, how does this work? How does the brokerage function work? And you know, obviously working with someone like you on that is so important, because you have that offering for these type of clients that, you know, it's the only area I add some degree of hesitation to people. Just say, really vet your service providers, you know, really speak to them about what you want to do, and say, how much have you done this before? What have you seen? What are you seeing in the market? And you will work out very, very quickly when you speak to people, whether they are credibly in this thing or they're just kind of telling you they are because they want to be. And as I say, you get some great lawyers, great admins, great auditors, great people in the traditional space that are fantastic to work on traditional launches, but just may not quite get the nuances around the crypto space that I think still is pretty important.
Lastly, what is about the time frame when a client engages you for fund formation BVI to go through the process? How long does that take approximately from start to finish?
We would say conservatively 4 to 6 weeks. So 4 to 6 weeks from the minute you pick up the phone, you start saying we want to get going, through to getting your formal license, your formal certificate that you can put on your wall, would be 4 to 6 weeks. I think my record for an incubator fund is 10 days. If anyone wants to try and this person was desperate, but if anyone wants to try and beat that, they're welcome. But generally 4 to 6 weeks is kind of how we see it. As I say, what's important is to also just get those other service providers around you, and especially if you're not doing the incubator fund, you know, you are doing an approved fund, you know, getting that fund admin that's the right fund admin that understands your business and can give you an initial package, but one that you can grow with as well.
This has been great. Thank you so much for taking the time. Really appreciate it. You know, it's not every day that people who aren't already in the industry actively as a fund manager can get this type of information, you know, honestly. So, you know, much appreciated. Looking to obviously have you back at some point. Looking forward to actually, during these strange times, having a drink in person at some point.
That would be nice.
We may not hug, but we'll have a drink together. And
2 meters away, but we'll have a drink.
2 meters away. But Phil, thank you so very much. Everybody, his information is all below in description, how to contact him. If you're thinking about starting a fund in the British Virgin Islands, or even just comparing and contrasting against that domicile versus Cayman or any other one, I definitely implore you to contact him. He's a straight shooter. As you can see, he's inventor of the Incubator Fund there.
I am actually going to get that t-shirt.
I think you should. Phil, thank you very much. Much appreciated for your time.
Good to see you, my friend.
All right.